All right, we're back here with Mr. Jake Claver, returning for his second interview here on the XRP pod. Hey, Jake, how are you?
I'm blessed, brother. Appreciate you having me back.
Yeah, well, the first show did a fantastic. The audience loves you, so I had to, I have to do what the audience asks, and that is bring back the stars of the community and let them speak, as they say. And that's the key today. Hey, listen, we're going to be covering a lot today. We're going to get into this whole theory I have, and I think we might be breaking this theory, Jake, you and me,
I love that.
breaking a theory on the sense of cross-border blockchain integration between the EU and the United States. Some big things happening there. We'll get into that details. We're going to talk about does Bitcoin hit $1 million? We're going to talk about what about the ETFs for XRP? Looks like we might have some news on that. So you guys want to stick around for all this good stuff today. Jake, let's just jump into it. I want to go over and share my screen with you because there's a lot happening out there. And the first thing I wanted to show was this tweet I popped out this morning after some analysis last night with the research team. And basically what this boiled down to, because this is Christine Lagarde from the EU, obviously the ECB, European Central Bank. Pleasure to welcome Paul Atkins. Of course, with that, there was meetings going on, and then of course we got a lot of points that were coming across that. But basically what they were doing was meeting on Project Crypto and the EU and what they're doing in terms of the MiCA framework. So that led to us going a little bit deeper late last night, and this was the tweet I put out. And it said, basically, this is massive. This is bigger than what I thought initially after I read the transcript on what the speech consisted of. And what he said was, direct quote from Axon's, crypto's time has come, and most cryptos are not securities. Imagine that. Most cryptos, not securities. And then the U.S., first they're going to push for super apps, which I have some theories on that. And then the U.S. and EU regulatory alignment is on the horizon. Dude, we might be here. This might be it, what we've been talking about for quite some time. Here's my theory. I mean, there's only one option here for cross-border payments, right? Am I wrong not saying that?
I think you're right on point, Paul.
So the implications could be significant. All right. If you look at, and I look at it, let's be very clear. This could be transformational, and this could also be bad for XRP. And it depends on how the government chooses to go this route. So there's a lot, the bullish scenarios I was looking at, the Clarity Catalyst, of course, Atkins has already kind of leaned into on this. Mm-hmm. And it's clear that the U.S. does not necessarily have a plan, at least not that I know of yet, that would possibly replace that scenario. And then the bridge currency advantage that XRP already has. What are your thoughts about this?
So we've been kind of following along for what they've been doing there in the UK, and when talking with regulators, have been in DC multiple times. We've kind of taken the approach of allowing everybody else to put things out and then cherry picking the best pieces of that. So this conversation between the SEC and the EU, you need some overlap and interoperability. And I think that, Christine, they've obviously, they're much further along on what it seems like for the digital euro. And they talk about how much they need it. They've also had, clear rules of the road there in the UK for an extended period of time. And so I'm with you. I think this is kind of the bridge the gap moment where they're going to integrate this stuff. And to your point, if it's what we think it is, it becomes really great for a few digital assets.
And the impact for XRP could be huge. Now, just remember, guys, there are already a lot of established banking partnerships in Ripple's network with the EU. So they've already laid the groundwork, and they have been doing this for quite some time. Remember, your transaction cost on Swift right now still is like 25 to $50 versus what we're talking about is fractions of a cent on the XRP network. So this is a framework that definitely lays out into the potential of a coordinated US EU framework with, and we're going to talk about China in a minute, but imagine the US and the EU creating a framework that could position XRP as the primary bridge asset between the dollar and the euro-denominated transactions. Fantastic. And the model's already in place.
Yeah,
Are they? Is this just too good to be true? Or what am I going to get rug pulled here, Jake? What's
I don't
going
think
on?
so. I don't know what other option they would have
Yeah.
for this, right? You look at Brad, right, and Ripple. They
Yep.
met with Christine when she was the head of the IMF back in 2017. There's multiple photos of that interaction, and then she moved to the head of the ECB. So she's been involved with this technology for a long time and deeply understands digital assets and these networks. And if you want to think back, what would have been around the whole time that she's been working with this?
Right.
There's only a few options.
Mm-hmm.
Even if you looked at Solana, or I think HBAR launched in 2017, Cardano, kind of the
Yep.
same bucket.
But
And
they
look,
just don't have the partnerships. That's the
well,
key.
that's the deal. Like the
Yeah.
inroads and the depth and breadth of adoption and capability to add this to the tech stack, none of those others have the penetration to be able to facilitate this. So I'm with you. I don't think it's too good to be true. I think this is the real deal.
Well, I don't think that. Well, first of all, major crypto media has not come across this analysis, so we may be very well the first podcast to break this. And if you look at just RippleNet integration, Ripple already has a significant European banking partnership, clearly. And you look at the supercharge adoption rate, which could be clear. Remember, major European banks currently using RippleNet right now. A lot of the U.S. banks still were on the fence because of what was happening here with SEC uncertainty, regulatory uncertainty. Now that's all changed. And now you got Paul Atkins over there literally nestling up to the ECB. So very interesting.
The piece
Okay.
that I think is going to happen previous to that actually being implemented is you're going to need enough liquidity in the asset.
Right.
And I think that's what you're going to roll into here with some of the other topics that we have going
Yeah.
on.
Well, and if you think about this too, and I want to also push the bearish scenario here because you have to look at both sides.
For sure.
If you look at CBDC concerns, the ECB is actively developing a digital euro, so we know that is in place. The U.S. has explored a digital dollar, but definitely not on the table with the anti-CBDC Act. So it is possible that a direct euro to USD settlement rail, at least on blockchain rails, would have to be one-sided if it was sitting over here on the ECB side. The question would be maybe that's multi-chain over on the US side, but it would push away the need for intermediary tokens like XRP if they went that route.
What
So
is the
what
euro to the
do you
dollar?
think Atkins is over there pitching anti-CBDC?
I don't. I think that they will roll out a digital euro, and I think a lot of other economies will probably end up having a UBI of some kind, which is what most people are concerned
Yeah,
about, right?
right.
The control of your currency, how you spend it, how long you have to spend it, any other constraints around that. Um, I think that can be used responsibly, and I also think that it can be very detrimental,
Yeah,
right? We're going to talk about China and what they're doing, but you also need demand for U.S. Treasuries. And
yeah,
so, with the proliferation of stablecoins over here and the Genius Act, that's going to drive a significant demand by private parties to buy up U.S. debt if it
yeah,
were to flow back this direction from international parties, which I think will
right.
happen. There's some dynamics there, but to your point, you need. I still think you need some intermediary asset to be able to settle between all of these, because if you don't, you just recreate Nostro Vostro accounts. They're going to have to park, the digital euro and accounts over here, and we're going to have to park a bunch of different types of digital dollars over there with them to be able to settle. You need some intermediary asset that's agnostic and has a DEX to be able to settle all of that.
Yeah.
So
Well, and I think timing is another factor here, okay? Because remember, this is still very early stage for mostly governments and for nation states because they haven't got an infrastructure in place. Short term, XRP benefits just because of regulatory clarity, because that's done, and the infrastructure is in place. Even in the medium term, which I would say maybe 2027 to 2030, maybe there's some competitions from CBDCs, but the advantage would be the network effect. If XRP were to gain early adoption in this timing, because we have a small window here that it could happen. And if they gain network
First mover
effect.
advantage. Yeah.
I mean, how would you replace it? You wouldn't. Why would you? The cost is low. It's an intermediary asset. You can use whatever asset you want on the other side. I mean, it really becomes kind of the best of both worlds for everybody. So
And I think,
it
there's
is
been
a
a
big.
delay in the Clarity Act, but we have clarity for XRP. And until these other assets really have a full understanding of what they are, I mean, you just had Adkins say that most of these aren't securities, but
Yeah.
what's most of them? He didn't say specifically which assets weren't, right? But we know for a fact that XRP's not. And so if this catalyst or things were to transpire prior to the Clarity Act being passed, there's really only one option.
Yeah. Yeah. My bull case would be this: if XRP becomes the de facto bridge for USEU transactions, your price target, I'm going to put it between 15 and 20 in the early stage, just on transaction volume alone. Market cap potential probably be somewhere between 750 to 950 billion.
Hmm.
If you look at institutional adoption. So that could be pretty significant in a short period of time. We could see this within 6 months to a year. If, in fact, the only concern I have is the EU moves so freaking slow sometimes.
Well,
I just wonder.
what's Christine say? She says, it takes forever and then it happens all at once.
Well,
That's
that's
not the
true.
exact
Yeah,
quote that she has, but that it's
yeah,
something similar.
yeah. And it also could the other interim, I wouldn't say the bullish and not the bearish, but the baseline could be a mixed outcome where XRP coexist with some CBDCs that they have, because we're going to probably see that for
Oh,
XRP could be used in the private sector for commercial payments.
for
Government
sure.
could do interbank, settlements. Okay.
Well, if they
And that would still be big.
if both parties want the same CBDC, then that's fine.
Yeah. Yeah.
It's when one counterparty wants something different than what the other counterparty wants to pay in.
Right.
And
Right.
most of these international transfers, that's the case. On the
Yeah.
other side of that transaction, they want whatever the sovereign currency is in that jurisdiction to be able to
Right.
spend it in that economy. Now, dollars spend all over the world, but yeah, I think there
Well,
still needs to
listen,
be
we got to keep a close eye on this, okay? Can I count on you as one of my research partners on this one? Because
for sure.
there could be some very significant developments that are coming. I know our team is building a huge database on the movements now, especially within the countries within the EU, because they're starting to show up with how they want to participate. And I think if we see countries, key countries, going that direction, it's going to be good. Let's jump to our next topic, and that, of course, is what's going on with the SEC right now. This is kind of the I won't say the bad side of what's happening, but it kind of validates what you and I have talked about quite a bit, and that is the SEC is now in a position where they destroyed documents. This is Gensler now. And now the inspector general actually says today we have proof from the SEC's own inspector general that this occurred, and they're asking a federal court to address the violation. So, do you think anything comes out of this, or is this just posturing by Coinbase in this particular case with Graywall, or what?
You know, I don't want to say it doesn't surprise me. You would think that, people that are put in these positions and given this type of power would do the right thing, hopefully.
Yeah.
These aren't voted in. I mean, they are by their peers, but it's not a public vote. So,
Hmm.
with Gensler's background, he was part of the Clinton administration. And then he was moved into this position after he was at MIT and taught extensively about digital assets.
Yep.
I was excited when Gensler got the
Yeah.
position at
He
the
he looked
SEC.
like he was going to be a good thing for
I
assets,
thought it
for
was going
digital
to be
assets.
great. He was going to, foster innovation here. And then he played the complete opposite role the whole time that he was there at the SEC. And I don't know, you know, sometimes you just walk into a bear trap
Yeah.
and
Yeah.
it's already bad. And you're like, well, how am I going to navigate this? And people make poor choices. So we'll have to see how it plays out in the courts. I don't want to make any determinations. It's obvious that it's transpired, though, if they're going to be able to put this out publicly. So
Yeah.
I'll be watching it closely, just like you.
Let's talk about what Winklevoss said this morning on CNBC. I'm sure you saw this clip, but this was basically saying We think it's going now. Granted, you got to remember, Gemini just went public here, so they're talking their book, but saying, "Hey, we think that Bitcoin's going to $1 million. You just hodl. You know, it's going to 10x from here." If Bitcoin does, first of all, how does that work?
Right.
And if it does hit 1 million, what kind of impact would that have on something like an XRP?
Oh, the market cap of crypto would have to 10x from here
Yeah.
reasonably, right? Because we're around $100,000 of Bitcoin today. If you had a 10x in market cap, we go from 4 trillion to 40 trillion. And you'd expect that, you know, if you look at I look at the XRP versus Bitcoin chart all the time. That's probably what I watch more than the XRP chart itself when looking for, you know, what's going to happen to XRP. And we're poised for a significant move higher in XRP's valuation versus Bitcoin based on what the chart looks like. So, you know, if Bitcoin does get another leg up and we really do see some euphoria and a lot of liquidity move in here, I don't know what other mechanism would drive that, though, is my only concern. I mean, we already have the ETFs, we already have treasury companies,
Right.
you already got governments and sovereign wealth funds, and it seems like all the players are at the table. If that was going to happen, we would have seen higher prices, in my opinion. And you know, I think we're at a point in the cycle where you might get a little more upside in Bitcoin, but you know, tends to be it looks toppy to me. I think we're
Yeah.
going to get a rotation into alts before we see the million. But that's not to say over the
Well,
next
well, I think he's talking about a
5 years,
5-year,
longer time
10-year.
frame.
Yeah.
Yeah. Again, I don't see who else is going to buy it to drive it to that value on the supply and demand curve.
Well, okay, so let's talk about that for a second. If you have, because this is a whole narrative that we've been talking about for some time on the show, is that this is the cycle of the haves versus the haves. You know, in the typical liquidity model of great markets, there's always winners and losers. That's how markets work. Okay. In the past, it was the haves versus the have-nots. It was retail getting basically rugged.
Right.
Now, what we're talking about, retail is not at this game as much. Right now, we're talking about private wealth, you know, family offices, and now RIAs starting to layer this into all of their investment thesis, which has become a thing. That's going to be real because you're talking about high net worth individuals, and there's a lot of those.
That's true. I mean, it's a good point you make. So, you know, total addressable market for all of the money managed by RIAs is around $160 trillion globally.
Yeah,
You've got about 16 trillion in family office. And so if you had, you know, just a small portion of that make its way into crypto, right now about 60% of family offices have no allocation
yeah,
to digital assets. Wealth managers, it's also very slim. Most of the time it's through these ETFs or other structured products that they're getting access to it. Direct allocation's very limited. There are a few out there that also partner with Anchorage to be able
yeah,
to provide that aside from us. But yeah, I do think that it'll become more prominent in people's portfolios. I have a hard time another 10x worth of demand unless you had supply constricted again. So to your point, if it's another 5 years and we have another halving, and now we're only getting 1.6 ish Bitcoin per block, maybe
maybe.
that's when I could see a circumstance where it could move substantially higher.
Well, I think the good news on this is that everybody's bullish right now on crypto in general, which raises, it's kind of like the tide raises all boats. That would put Bitcoin at a $20 trillion market cap.
Hmm.
Total crypto market would be somewhere between 60 and 100 trillion. And remember, that's 3 trillion, 4 trillion today. So that's a significant expansion, in the market. Granted, we don't even know what that's going to look like if we start to see a global economy starting to, integrate outside of China, which we'll talk about in a minute. But if the EU comes in, if we get South America, Asia, and to a certain extent the Middle East, now you've got more of a global economy working on the digital and digital asset system eco. Yeah, you're going to be talking about a massive move. One other thing that you have to consider here is stablecoins.
For sure.
Stablecoins now hit 300 billion on coin market cap. We're nearing, if you go over to XR or RLUSD, I'll just share this. You go to RLUSD, bam, That is now setting as 728 mil. And if you look at the ranking, let's see where we are. Yeah, so RLUSD has started to move up the rank here in terms of
Hey,
overall market cap. Market cap, yeah. So
almost in the top 100.
yeah, so this is interesting. Are we nearing that time where RLUSD gets a shot up? What are your thoughts?
You know, Ripple's got a bunch of partners, and they've partnered with BNY to be able to facilitate the treasury for
Yeah.
RLUSD. Um, I think it depends on the ripple effect. How many people want to utilize Ripple's stablecoin for transactions? The
Yeah.
majority of what we've seen so far are exchanges listing that token, right? And that's what's
Right.
providing liquidity. They're exchanging dollars to Ripple, they're buying treasuries, they're minting RLUSD. The majority of that's actually on Ethereum. It's not even on the XRPL right now.
Hmm.
I don't know. Some people have, concerns about that. I'm not overly concerned about that. That's where the liquidity is, and most of these people are transacting stablecoins. I do think we're going to see a migration onto the side chain, the EVM side chain, on the XRPL for a lot of these stablecoins. Um, a little birdie told me that another network, I probably can't even say what it is going to list USDC here next week.
Hmm.
So that'll be cool. I think people will be excited. But that's more liquidity for that token, right? So if we
Yeah.
had RLUSD listed on more networks, and we see, some actual institutional adoption, let's say, um, some of these smaller banks that aren't going to issue their own stable coins decide that
Yes.
they're going to utilize RLUSD for what they're going to offer their clients. That's where I think you see the big move if we're going to have one.
Hmm. Well, and I think the market opportunity here is pretty significant. They're talking about, right now, what was that? Let me
Three,
get
three
that.
trillion
Yeah,
by
3 trillion.
2030 in total.
So,
For
and
stable.
I still think that's way low.
I do too. I think that we're going to see much, much more than that. Especially, the economy is already digitized. Most people don't use cash. You're using
Mhm.
your phone for different things. Here in the U.S., it's going to be interesting. At Amazon and Google and some of these larger enterprises, and then also all these other banks launch their own stablecoin.
Yeah,
RLUSD is going to have a lot of other competition for retail, but I think for the institutional payment side, they've kind of set the standard for how that looks,
right.
audits, backing, on all of that. So I don't know that there's going to be a ton of people that compete against them in that space in particular.
Well, and you got to remember too that with Paul Atkins' pro crypto stance right now, stablecoins are going to be they're clearly going to be regulated by banking agencies at some point, which is going to be a framework. And if you look at the market right now, Tether, their dominance, I mean, what is it, 67, 68% of market share right now, which currently would not get access to the US system because of their regulatory um, alignment. Now, I know that they just got behinds on. They're trying to get in a position where they can, but it may very well open up the game to what you're talking about, smaller banks and also maybe even some of the bigger ones with the right kind of partnerships, just because of the cross-border payments.
Well, I think, Bank of America, Goldman, City, JP Morgan, you got JPM coin. That already exists
Yeah,
in their internal
yeah.
infrastructure. They just haven't launched it to the public.
Hmm.
So, and we've had Bank of America come out and say, hey, once there's clarity around this and we have a path forward, we'll be issuing a stable coin. Their CEO said that. We haven't
Yeah,
seen it yet. Um, Stripe, you got these other large payment processors, MasterCard, Visa,
yeah.
PayPal, Venmo, Cash App. Um,
And this would still be a good bridge currency role too, because you could still see XRP being used on like a stablecoin to stablecoin conversion.
Yes. Well, that's my
Yeah,
whole point, and that's why people are like, "Well, stablecoins replace XRP."
yeah.
If you wanted to just blow up the whole system with Nostro Vostro and have, probably $100 trillion locked up in between all these counterparties to be
Hmm.
able to settle these different stablecoins, yeah, go ahead. But the whole point of this is to remove Nostro Vostro and having to
Yeah,
hold funds with counterparties. Because
yeah,
right now they all use the U.S. dollar, but if they have these own independent stablecoins, now Bank of America is going to have to hold 10 other stable coins just to be able to settle with counterparty banks.
Yeah.
You have to have something that sits in the middle to settle that between two people, because they're not going to hold, like Bank of America doesn't want to use JP Morgan stablecoin.
Right. They're going to settle in between. Sure.
Yeah.
And if there is a bridge, XRP obviously is the perfect one. I mean, you're talking about considerably lower transaction costs than what you see on ETH.
For sure.
Even though with ETH, I know they're trying to, get past this on the next update, and they're on a breakneck race for that right now because they know
Well,
the writing's on the wall now.
they've been on a breakneck race for that for 7 years. They
Yeah.
did the update to proof of stake, which was supposed to solve a bunch of these problems, and it didn't. Right.
Yeah.
So I don't want to say anything negative, but I don't have a ton of confidence that they're going to be able to reduce fees and latency on that network.
Yeah. And I don't see Tron playing into this because the regulatory compliance, the infrastructure is more robust, the banking sector relationships, so Tron, I would say, is the odd man out.
What do you think about Solana?
Yeah. Newer platforms like Solana or Polygon. Yeah.
And so, but then that kind of goes back to what I said earlier with Christine Lagarde meeting with Ripple back in 2017. They just don't have the duration of
it's a
time.
different chain. You're
Yeah.
right. It is a different chain. It is a different chain. Man, we could go on forever about this one. For sure. Let's talk about Morgan Stanley. They are now anticipating that we are going to get 4 rate cuts. I had one of my favorite analysts on yesterday, and she was hitting on this very point. Is she thinks we're going to see 4 straight cuts of 25s. Morgan Stanley seems to, but they're saying 4, boom, boom, boom. So that means January, really, I guess, would be the 4th
Last
cut.
one.
What do you think? You think we're going to get 4 quarters, or do you think it's going to get a little bit more aggressive?
The Fed always reacts late, and when they react late, people always go, whatever it is, either direction. If they get overexcited or too down, and the Fed's no different. And historically, they've either been too conservative and just held for too long, or aggressively cut things as fast as they could when something bad happens. So if things stay as they are and the status quo just kind of maintains, and we don't have the reverse carry trade unwind or anything wild
Right.
happen,
Mhm.
sure, I could see kind of a slow roll over 4 quarters. But if we get some type of systemic event that causes things to need to happen faster, I think you could see 150 basis points in one
Okay,
move.
well, slow down a minute. Systemic event. You were using these words, man. These words that scare me. Okay. Explain what you mean by systemic event.
Well, so are you familiar with the reverse carry trade?
Oh, yeah. Yeah.
Okay.
Well, we had a good
Yeah,
conversation
we had
about it.
big long conversation.
If the Japanese unwind it, and the Japanese are very, very active right now on blockchain. Very
Yes,
active.
yeah, they're going to
So
be
it's
issuing.
coming.
They've announced that their CBDC is going to go live in early 26, in January 2026.
Mhm.
But if we move at all on the rate and we come down 25 basis points and they come up, that's going to squeeze people that
Right.
are in that trade. And when that happens, they're going to start mass liquidating positions to be able to repay those loans as quickly as they can. And it ends up snowballing. Because again, people get emotional. If they see everybody else running for the door, even if the place isn't on fire, they're going to run for the door too, because they think something bad is happening. So it just exacerbates what's going on. And so yeah.
So a quick question on that. If we have lower rates, wouldn't structured capital start to get
You
out
would
of bonds?
you would think so, right? Because traditionally you would move to risk on
Yeah.
with lower interest rates.
Shifts in
But
capital flows from bonds to growth assets. Simple.
normally, yes. And you would see an expansion in the stock market. You would see risk on assets grow. I have a very unique opinion on this, that we're going to have a buy the rumor, sell the news. I think that we could see expansion up to the rate cut. And then when we have the rate cut, it's actually going to have the opposite effect. I think that you're going to see a top in markets and big downside. And again, I'm just one guy. I'm just,
Okay, well, let's go back to, because if my history is right, you've got, what was it? 2019, I think it was. We had 75 bips.
Mhm.
That drove the market up. It was somewhere between 20 and 30%. Don't count,
Yep.
you guys Google it, but it It was somewhere between 20 and 30 in a short period of time, the S&P 500. So that would be interesting. Okay, so if the market goes up to that level, let's assume we get another, like 1995 era, because we had like 70 plus all-time highs in 1995. Remember, this was in the boom of the internet, guys.
Yeah.
Boom of the internet between 95 and 2000. Those were the 5 years, which is where I think we are right now in crypto.
I would agree. I think we're going to get one more big drawdown with a V bottom, and then we're off to the races for the next decade.
Interesting. Okay. Woo, man, this is going to be a crazy market coming in on this stuff. I'm telling you guys, this is why you listen to the XRP podcast. This is why we get guys like Jake on, which, by the way, if you're not following Jake, where can they find you?
Yeah, we're over on Twitter. We're on YouTube. Most channels are just Jake Claver, and then they're on Twitter. We're beyond_broke. It's my moniker.
I love it. Beyond broke. I like that one. Don't go broke. China is tightening up their grip here, guys. We did a show on this on the main channel. This was a big deal because it starts to put a lot of pressure, I think, in general, on just stable coins and what that might look like. If China gets a good grip on their own development, in other words, they're opting out of stable coins because they realize the U.S. has pretty much almost checkmated them, in the sense of accelerating the dollar and exporting it in the form of stable coins globally to try to basically offset the debt, which is what the plan is. Devalue the dollar. We know the game. I mean, this is, economics. Do you think China could opt out of the crypto ecosystem and not be impacted?
I mean, they have enough liquidity over there, but it's already caused problems in their economy, right?
Yeah.
So you've had these
Deflation.
you've
Yeah.
had these ghost cities built because any of their money that's made over there, they have to roll back in. They make it like a 90% mandate that you have to invest in their own economy, and so you
Yeah.
get this bubble, and money can't move where it needs to go.
Mhm.
So I don't know that they want to repeat those same mistakes. Maybe they will. They're a communist country that are just like quasi capitalism. But I think this is their chance to be able to kind of move away from that. They're definitely going to have a CBDC. They will have UBI. They will have, personal credit scores that they're able to control and turn stuff off. That's just part of the culture and dynamic over there. But I think there's a way that people will be able to participate more broadly across the world with stable coins that they won't necessarily be able to control.
And I think to your point is that this deflationary position that China has been in. Back to your issue is that, and if you listen to Kyle Bass, if you guys don't know that name, go out and just research Kyle Bass. You probably know who I'm talking about, right? He's a big China pundit, and his belief is that China's in trouble. Is that they've got a real problem.
There's large issues, and you're going to see deflation globally.
Yeah.
So, and I've talked about this in the past. I'm not sure if we've discussed it or not, but if you knew that there was going to be a huge deflationary collapse, what would you do? You
Well,
would
you gotta
front
go
run
to
it with a bunch of inflation.
Yeah, exactly. Yeah.
So, obviously people are upset with prices being significantly higher right now, but as you have the advent of blockchain and AI and all these technologies converging and you get an amplification of that, the cost of production should come down substantially.
Yeah.
And also global commerce.
Right.
And so, I do think we will see prices stabilize, but it's going to be volatile. We'll probably have a big pullback and appreciation in the US dollar, which I
Yeah.
think people will be happy about.
No doubt. I want to go back and visit this because this was another article that hit, and this was where industry groups are urging both British government to include digital assets in this UK-US tech bridge. This is ahead of Trump's state visit, which is coming up. So basically what the idea, let me zoom in on that for everybody so they can see it. Basically what they're saying is industry groups now pressing the British government to include stablecoins. Now, think about this outside the EU, now the UK, to include this tech bridge ahead of President Trump's second state visit. This would, excluding digital assets, would be a missed opportunity and would risk leaving Britain on the sidelines. So remember, Britain is not really EU, even though they do occasionally kind of step into the EU flow of things. But this would just be another friendly going to the idea of, a cross-border settlement architecture between two of the biggest G7 countries out there.
They have the digital pound is what they're going to launch over there.
Yeah.
Yeah, so the euro and the dollar and the pound and the dollar are probably some of the most liquid corridors in the world, and they've been working for decades to like figure out settlement through these undersea cables. Some of those were just cut in the Red Sea to make transactions happen faster. And now you got Elon with Starlink allowing things to be cut basically in half for
Yeah.
how long that communication takes. But it'd be very interesting if there's blockchain rails to be able to settle and exchange those values real time. International commerce will pick up. There's a lot of deals that are done between London and New York, and so I think that would be huge if they were to move that direction. And to your point, if they don't, they're going to be left behind, and
Yeah.
the EU is going to be ahead of them. So,
Well, and I think, what we're dealing with right now is the realization that most of the world who had a little bit of a head start on us here in the United States has realized that once you put American innovation in front of something and you give them kind of the let's go signal, which is what we have now, that I think just accelerates the amount of not only companies that want to do it, but also the amount of companies that are going to want to integrate here into the U.S. from abroad, going out there. And of course, that includes, what's happening there within the EU as well.
yeah,
Hey, let's
people
go
need
over to,
confidence.
go ahead. Go ahead.
I was going to say people need confidence in stuff, and without the regulation and clear roads here in the U.S., there's going to be apprehension abroad and here domestically, and you're just not
Yeah.
going to see the big players move in the way that you would hope until that happens. And we've
Right.
got it. So
Well, and that's good for digital assets. It's good for things like XRP and many others that are out there. Speaking of that, you've got XRP, Solana, and HBAR ETF listings that are starting to show up on the DTCC. Just so you understand, this is usually like one of the last things that happens before we start to see SEC approval. So it looks like it's going to happen here, Jake. We're going to get an XRP ETF, and we're going to get a chance to see if XRP can prove itself in the world of ETFs. What is your anticipation once this thing launches, which is going to happen now, probably in October?
yeah, that's what it's looking like. It's the canary in the coal mine. It's Canary Capital that's
Yeah.
got the first two listings there for HBAR and
Yeah.
XRP. There's been a lot of estimations out there for what they think the inflows are going to be in the first, month, 6 months. I think that this is the way that these capital markets are going to move liquidity from different cryptos to one another. And we'll see the rotation out of the Bitcoin and Ethereum ETFs into these other ETFs as they get listed.
Yeah.
And I think that's what's going to cause the Bitcoin dominance to change like it has in the past, similar cyclical pattern. But all that liquidity is just going to move to a few specific digital assets that have these ETFs instead of the broader altcoins.
Right. Yeah.
So
For sure. There was Nate Garassi. We're just showing a tweet by him. The DTC listing, Fidelity, Solana listing, and Canary with XRP and HBAR. It doesn't mean anything from a regulatory standpoint because it's all on the SEC right now to approve it. But he's right. This is it's kind of like the final step that we will see going. But back to your point, Stephen McClurg from Canary came on this show and said 5 billion.
yeah.
Those were the numbers. 5 billion. That would be insane because that would be one of the largest, if not the largest, ETF in the history.
Yeah, I
Of
tend
digital assets.
to believe him. We actually ran into him at Salt and got to talk to him a little bit about what he's got going on. So very innovative. Love
Yeah,
Canary. I think they're doing some good work over there, and I'm excited for him to be right when that happens.
right on. What is your feeling on how institutional? Okay, so this is something that we get into a lot on the question of, do you get a direct exposure to the asset? Do you get institutional capital, family office, high net worth individual that says, no, I'm going to go the ETF route? You're in that business,
Mhm.
because you're managing both. How do you see this playing out?
how crypto native are you?
Yeah.
How
Yeah.
long have you been in the asset class? The people that have been here and understand how to hold the bearer asset the right way,
Hmm.
because there's a learning curve there, right? Like not everybody wants to deal with figuring out how to use an exchange, set up a cold wallet, move it off of there. Even with institutional custody on our side, we try to provide the best of both worlds, right? So if you're utilizing an ETF, you're going to have to pay, whatever the fees are. I think BlackRock's like 25 basis points on their Bitcoin ETF, but all these ETFs are around 1% or a little bit less, especially after they get enough liquidity into them. So if you're okay with those fees, and that's really kind of the cost of institutional custody and the assurances that you get for participating in that product, versus if you're holding it directly, you don't have those additional costs, but there's a learning curve and you don't get those additional assurances that you would get from institutional custody.
Right.
So that's what I think about in my mind. I'm like, okay, it's going to cost me 1%. It's kind of the insurance that this is
Hmm.
good, and I don't, there's liabilities on the other person. It's not on me, and I get that warm and fuzzy that I
Yeah.
wouldn't get if I was holding it myself. And family offices, some of them are very private, and they would prefer to hold the asset themselves and figure that out, and employ the people. But I think you're going to see the majority of the adoption from institutions and family offices as a whole, probably more on the structured product side, because that's also easy to report on. A lot of the frictions that we've had is Adapar and Orion and Black Diamond and all these reporting softwares aren't interoperable with these exchanges or the custodians. And so for them to be able to see their full portfolio, a lot of it's manual entry, unless you're just buying a structured product that's inside your traditional portfolio and you have full visibility. So I think
Yeah.
most people are probably going to go that way.
Well, let's think about some of the numbers on this because when you look at and this is research that we've done for a while, mainly because our seminar, we have a lot of high net worth individuals. So I did a few slides on this not too long ago for that seminar that we do here locally. And right now, the estimate is somewhere for at least in globally. I think globally the number was around 4,000 currently, and it was going to go up to as much as maybe like 6,000 worldwide family offices. And then now North
Well,
America, you look at what that might look like because of the wealth distribution shift that we're in the middle of right now. In other words, there's a lot of new family offices being
yeah.
created,
No, it's
and that's
numbers are
huge.
numbers are a little bit higher than that. So that would have been accurate probably before COVID. The numbers that you mentioned there, we've seen an
What is
explosion,
it now?
somewhere between 10 and 12,000 globally for family offices.
Global. Okay.
And that includes multifamily office, virtual family office, and single family office. There's three different types. So
Okay.
if you
So
were
the
talking about
single
maybe
is
single
what
family
I'm.
office,
Yeah, single family.
probably more accurate there. Yeah, but to your point, we think, we hope that a lot of our clients will need these services and set up family offices or work with us.
Yeah.
We do a lot of proactive work with people that have anywhere between 500,000 and 5 million in allocation to digital assets. And so if we do see some of these numbers, 20, 50, 100x, 1,000x on some of these assets, these people are going to come into substantial amounts of wealth and need all these private client services. And to your point, I think we will see, maybe even double the amount of family offices
Yeah.
here in the next 12 to 18 months globally.
And you think about the average assets under management for these family offices. I mean, we're seeing anywhere between half a bill to upwards of 3.8 to 4 billion under management. Those are significant. If there's a small fraction of that that starts to move into digital assets, which I think it's going to be a larger than a small fraction, now we're talking about a seismic shift in the market overall, without
Yeah.
a doubt.
I
I
mean,
get, and it goes back to my question to you: ETF or direct asset?
I think it'll probably be through the ETFs. Again, I think that there's a learning curve. Most of these professionals don't understand how to hold these assets, secure them, do it the right way, and they would rather just know that they have the allocation through the ETF and they get the upside without all of the additional, you know,
So
hoops they would
what
have to
would
jump through.
okay, just on the family offices, what would that be in your estimate on total assets under management, say somewhere in the 2030 range? What kind of number are we looking at?
I mean, today it's around 16 trillion globally in family office. I think by 2030 you could
And
easily
that's
see
not
that
even
double.
including RIAs, right?
Correct. Yeah, that's just family offices, multifamily office. A multifamily office has to have an
Yeah.
RIA to be able to manage those assets
Okay.
because you're
Yeah.
managing for multiple families. Um, but I think you could easily see it double 32 trillion over the next 5 years.
Wow.
And if they're all allocating 1% to digital assets, it'd be
What
three
is the
trillion
total,
alone
Jake? What is the total RIAs in registered
globally.
investment advisors in the U.S.?
Not sure U.S. Globally, it's 160 trillion.
160 trillion. How
10
many?
times. Oh shoot. How many RIAs are here
Yeah.
domestically, independent and part of firms? I don't
Yeah.
know
What,
offhand.
what,
I'd have
what
to
would
look,
you
but I'm
say?
sure it's hundreds of thousands.
Wow. And they have yet to deploy. That's the thing.
Yeah, we're just now getting interest from other RIAs. We have, three or four that we're starting to work with to be able to provide this for their clients
Hmm.
over the end of this year here. And ours would be a direct allocation. We're also looking at other structured products because, again, I think there may be a circumstance in the future where that may be the only way that you get access to some of these assets. If we do see the adoption at scale of, HBAR, XLM,
Right.
XRP, XDC, most of it's going to be bought up and used. And
Right.
so, if they're aggregating that, there may be only dark pools and OTC. Retail may be cut out of some of this
Yeah.
opportunity. And then, you're going to have to go through a structured product or pay a significant premium to get a direct allocation.
Yeah. Yeah. Even if, yeah, which is typically what happens in some of these offerings anyway, it's kind of, been shut out to that. So I don't know, guys, that means one thing for you, total what you have, right?
That's right.
Total what you have. Let's talk about XRP price going forward. People now putting up the $5 number again. Looks like we might see it pretty soon. What's your theory right now if we start to see XRP moving into the $5 range as Bitcoin, what is it, hitting around 115? I think it hit 116 today. So holding at 115 right now as we record. What's your thought?
Yeah, like I mentioned, if we do get posture from the Fed that they're going to absolutely lower interest rates here next
Yeah.
week, early in the week, if they come out and say something like, "Yeah, we anticipate this much," I do think you're going to see a pop in the market. I think you'd see an expansion in Bitcoin. I think you'd see the Russell breakout,
Yeah.
and that would also, lead to XRP moving along with that, and probably a rotation. Um, Only if we get some of these ETFs, right?
Yeah.
That's kind of the puzzle piece there. So, I don't know that it'll be slow moving. When XRP gets moving, it tends to be pretty aggressive.
Yeah.
Southeast Asia loves XRP,
Yeah.
and when they see it moving,
South
they
Korea.
pile in. Yeah. Um, so, again, I have a full theory on all this, how it gets to extremely high prices, but it's a bunch of catalysts that all kind of culminate for the perfect storm for that to happen. If it's just the ETFs, I think
Let's do the bare minimum. Let's say we know ETFs are going to happen,
yeah,
and we're pretty much sure, we're 90% sure we're going to
I
get a
list
rate
on the
cut.
DTC.
Yeah.
So, um, yeah, I think a $10 to $13 XRP would be very reasonable. Maybe even $20 to $25 XRP.
End of year or by this time next?
End of year. If we get the
End of year.
ETFs launched this year, I think that you could see that amount of liquidity move in. I think that there's going to be other things that culminate that cause it to go much higher than that. But
Right.
if it was just the ETFs, I think that those price ranges make the most sense.
Yeah. Wow. Well, right there, I think the key here, guys, is as we continue to see all of these very bullish signals going forward, they seem to be piling up. And I'm just wondering why we have not seen these parabolic price moves just yet. I think it's the trigger is still always on rate cuts. But more importantly, I think it's also just in general, the market condition right now, because it has been, just a consecutive number in terms of the S&P just being all-time high after all-time high, gold hitting all-time highs, silver now on a breakout. I mean, you got all these assets that are competing right now for what's happening in digital.
Yeah. If we do see, the implementation of some of this technology and the velocity of money pickup,
Mhm.
it's going to be interesting. I think they're going to have to reduce M2 which has almost been directly correlated to the
Exactly.
appreciation on a lot of
Yep.
these assets. So,
Yep.
what a wild time to be alive, Paul.
Man, no kidding. We are in the lion's den, as they say, and we are right there, literally, with thousands of lions just surrounding us right now. And either they're going to eat us or they're going to take us to the promised land. I don't know which it's going to be. But
Hoping for that promised land.
one thing is for sure, you always want to be in the lion's den. You never want to be on the outside. It's because that's where the winners are made, baby.
Yeah.
Isn't that
Diamonds are
right?
under pressure. That's the saying, right?
Yeah. It's where the winners are made. You know that if you're watching this podcast, you know that's where the winners are made. Make sure and subscribe right now. Give Jake a shout out over on X. Of course, we'll put this out over on the YouTube channel, but we'll also drop a few clips out there. I'm sure Jake and his team will do some retweets of it as well. So you guys stay tuned because we've got more in store for you here on the XRP pod. We'll catch you next time right here.
Thanks, Paul.